Hi, I'm Sean from Invest National. Welcome to the Christmas edition of Month in a Minute. It's been a big year. Let's go through what's been happening. Now, some of you will recall back in February 2020, we were down in Chinatown, the coronavirus had just started, and we were looking at all the closed businesses down there and how this was actually starting to affect the world. Obviously, no one knew the impact that it would have. Fast forward 19, 20 months, the world has been turned on its head and it's a totally different place. And some amazing things have happened. One of the things that has occurred is there has actually been the biggest wealth transfer in history. And unfortunately, this means that the poor have gotten poorer and the rich have gotten richer. Now, this is where economies are funny things. There was 5.2 million new millionaires created in 2020, even despite the pandemic woes that most people were having financially. So poor people were actually not getting any of this government stimulus that was going to big businesses through things like JobKeeper. And then there was also the release of funds through banks, which meant that people's property prices and assets went through the roof. Another fascinating part of the pandemic has been the move to cryptocurrency. If you graph the value of Bitcoin against the inflation rate, you'll see a similarity. It's as though as the government releases more money into the population, people seem that it has obviously decreased in value and then moved to a more stable currency. So people have been looking for an answer, an alternative, and it seems like crypto is now starting to be taken more seriously. A lot of exchange traded funds are now including cryptocurrency in their funds to allow the average investor access to these portfolios. Now, at the moment, inflation is a real threat. Quantitative easing, government stimulus, government spending has meant that the society is filled with cash and the price of things has actually gone up. This unfortunately prices some people out of the market. Now, the other thing is that our gross domestic product as a country has dropped. So this is a concern, and what we might find over the next couple of months is that interest rates start creeping up to start to flatten out the inflation rate. Now, the Reserve Bank putting up interest rates to curb inflation is something that concerns property investors. We've seen the market slow down towards the end of this year just because a few lenders have actually put their fixed rates up for the 5 and 10-year terms. Now, property prices have slowed a little bit in Sydney and Brisbane and Adelaide, but I've got to say Brisbane and Adelaide have actually persisted in these past few months, whereas Sydney has dropped off to about 1.3% per month. Earlier in the year, it was increasing at 3% per month, which is staggering. Now, some good news for apartment and townhouse investors who had lost a lot of value in their properties due to the international borders being closed. Students should be returning soon. And also, a lot of people are starting to notice the intrinsic value in these products. We're seeing a lot of people return to the market for apartments and townhouses that are simply priced out of the housing market. So there should be some growth in that sector as well. So that's it from me. Thanks for watching. Wishing you all a Merry Christmas, health and happiness to your family, and we'll see you again in January. Cheers.